don't need any extra capital. The balance sheet is strong, and there's very low execution risk because we have a proven team of people. We know the resources are there in the ground from the drilling that we've done, and we have the milling capacity already installed. So we're pretty well set up to get that doubling.
Hello and welcome to the Assay TV. Today I'm here at 1-to-1 Mining Investment Dubai with Geoff Hampson, CEO and Chairman of Soma Gold. So Geoff, great to be here with you today.
It's lovely to be here as well.
And so let's kick off. Give us a bit of an introduction to Soma Gold and your core operations.
Sure. So Soma is a gold producer. Our assets are in Colombia. And over the last 7 years or so, we've accumulated a 43,000 hectare property that has 2 mills and 5 different mining operations.
Okay, excellent. And so your recent corporate presentation outlined a pretty aggressive, strong growth strategy for the company. Can you talk about some of the key pillars of this strategy for the next few years?
Sure. So our growth strategy actually has 2 components to it. The first part is what we call organic, and that's really developing the properties that we own and adding on other properties that are nearby or adjacent. And so the key there is to leverage the assets that we've got, so the 2 mills and the known deposits. And so we have a number of deposits that are in the permitting process, and we have our second mill, which has just come back into production. So we're going to see in the very near term about a 40% increase in the number of ounces we produce from starting up the Limon mine. And then the Nechi mine is going to be permitted sort of mid next year, and that'll add another 25,000 ounces to our production. So we've got a pretty clear path on the organic strategy to go from the 30,000 ounces that we're producing now per year to a 65,000 ounce per year rate. The other component of the strategy is to look for acquisitions of other mines, other near-term or producing mines that are either in Colombia or in other jurisdictions.
Okay. And what are some of your kind of criteria with those acquisitions, those potential acquisitions?
Well, I think the number one is that we're not prepared to take a permitting risk. So we're looking for either very near term or past producing mines or a production situation that can be expanded.
Okay, excellent. And so Bagre is your flagship asset. So can you share some details, the current milling capacity, any recent upgrades? Give us the backstory.
Sure. So it's a 450 ton per day mill. It's permitted for 1,000 tons per day, so it can be expanded by adding another ball mill. But we think that the sort of nearer term expansion plan there is to add ore sorting equipment, which will essentially double the number of ounces we can produce. And we've done some bulk sampling of the ore sorting technology, and it works really well. We're getting kind of a 95 or 96% recovery and a doubling of the grade. So that's very effective and inexpensive way of doing it. And we've also just recently added some additional leaching capacity because some of the metallurgical work that we've done shows that we can increase our recovery by a couple of percentage points, and that should start showing up shortly.
Okay, excellent. And so you talked earlier about the Limon mill restart. And that's been a major focus for the company recently. So, can you talk about the full timeline to commission, like full commissioning, production? What can we expect?
Sure. So the Limon mill was the first asset that we bought in Colombia, and we completely rehabilitated that mill. But just as that was ready to go into production, we were able to buy the Bagre mill. And because we didn't have enough ore to feed both, we put the Limon mill on care and maintenance until we had enough sources of ore. We now have enough ore. And so back in sort of February or March of this year, we decided that we would turn the mill back on. We've gone in and done a whole bunch of work and replaced some things that needed to be replaced. The mill is now turning. And it's being commissioned. It's doing ramp up. So we'll be at full capacity by the end of the year.
Okay, excellent. And so another recent announcement was you announced extending a copper soil anomaly at the Aurora deposit or project. So can you talk about how this fits within Soma Gold's overall strategy?
Yeah, so on our property, there's a lot of small miners, artisanal miners. There are some legal miners as well, but the ones that we're focused on are the ones that we're formalizing.
Hmm.
And part of that process is for us to go into those mines and to take samples and to try and understand, what the formation is. And in the Aurora area, where the Aurora project is, there were a series of small mines. And so that gave us an indication that there was some good mineralization. So the first thing that we usually do is soil sampling. So we did a soil sample regime in that area, found the good indications of gold, but also quite surprisingly found a very interesting high grade copper anomaly. We did some geophysics. The copper anomaly corresponded very nicely with a magnetic high.
Hmm.
It's about a 4.5 kilometer long strike by about 250 to 300 meters in width. And we're getting 750 to 1,000 parts per million of copper, which in soil is pretty high. So we're pretty excited. It's a bit of a surprise because we didn't know there was copper there, but we're just moving drills onto that deposit right now. So in the next couple of months, we'll have a pretty good idea of what's there.
Okay, excellent. And I mean, copper and gold are two commodities that have been in major focus the past year, both doing pretty well. Do you see kind of this trend for copper and gold continuing?
I mean, I think so. I get asked all the time what I think is going to happen to the price of gold, and I usually just say I don't know. But I think there's generally a consensus that it's going to stay in these levels or go higher.
Mm-hmm.
Our costs are, our cash costs are running at about $1,500 per ounce, and all-in sustaining costs at about $1,800. So at $4,100 an ounce or anything above that, it's pretty good.
Yeah, absolutely. And so, what are some kind of key near-term catalysts that we can be on the lookout for from the company in the coming months?
Yeah, as I mentioned, I mean, in the very near term, starting in Q1 of next year, we're going to have a 40% increase in the number of ounces that we produce. That's going to come from the Limon mill coming online. And then as we bring the Nechi mine online at the end of next year or early part of 2027, we're going to see another 25,000 ounces a year of production.
Mm-hmm.
So in the near term, we're going to see a doubling of the number of ounces that we produce on an annual basis, and maybe a bit more.
Excellent. Well, it's definitely a kind of a positive trajectory for the company.
It is, and I think that what's nice about it is we don't need any extra capital. The balance sheet is strong, and there's very low execution risk because we have a proven team of people. We know the resources are there in the ground from the drilling that we've done, and we have the milling capacity already installed. So we're pretty well set up to get that doubling.
Excellent. Well, we'll definitely check back in the next few months and see how things are progressing. But Geoff, I want to thank you for joining us here today at the Assay and at 121 Dubai.
Thank you very much. My pleasure.